This week on The Capitalist Investor, we're going to talk about Goldman Sachs and how they are increasing recession odds, and also how the S&P 500, their target is now 5,700. We're going to talk about tariffs and how they affect car prices, and then Doge. We're going to figure out and talk about, is this going to help with inflation or hurt inflation? These are the topics we're going to be talking about next on The Capitalist Investor.
Hey, Tony, how's it going today?
Good, man. Good. Capitalist Investor. We're back and better than ever because we had a small delay last week. You were on vacation. And,
I was, yeah.
And it's tax season, man. There's just a lot of things going on. So
that's for sure.
Yep. So we talked about in that intro, Goldman Sachs, they're predicting, a higher probability of recession and lower expectations for the S&P 500. We're going to talk about tariffs and how they affect car prices, and then our weekly Doge.
Yeah, Doge wherever it goes.
Yeah, I like that.
Yep.
So what's Goldman Sachs saying?
Yeah, so I think this was kind of big news to start the week. Goldman Sachs put out a bunch of stuff actually, and they increased the 2025 odds of a recession from 20% up to 35%.
Okay.
So. I feel like, sometimes these percentages, it's like, draft grades after the NFL draft. It's NFL draft season. So, it's basically impossible to know, how someone's going to do right after you drafted them.
Yeah.
Yeah, I don't know if it is really moving the needle, a 15% increase in recession odds. Yeah. But it certainly got people's attention.
Yeah. I mean, a lot of these Wall Street firms are recasting. Because I don't think they were expecting, President Trump to get on the mic and say tariffs,
yep.
and the market just starts freaking out because the market loves direction. They like predictability, and that is opposite of what you get from President Trump.
Yep.
So, because a lot of analysts before 2025 started said, hey, we're looking at mid-single digit returns somewhere in the the mid 6,000s, which would give us like a 4 to 7% range. And there were not that many that were expecting a pullback, but it's kind of hard not to expect either. I'll call it flatness. I know that's not a technical term, but like the market being flat or maybe even negative after two S&P years that were up 20% each,
yep.
Right? So based on what Goldman's saying, based on where we started and where we could finish at 5,700 on the S&P 500, today we're at 5,600,
right? And
maybe even lower, based on where the market's going to open this morning. But we're down 1.5% from, we would be down from the beginning of the year to the end of the year, what they're predicting, down 1%. We're down like 5, 6, 7% right now. So we got to think about we're down about 5 or 6, 7% from the all-time highs.
Right.
That's where we're getting into that correction mode. So what, What happens if the tariffs are lifted, though? I know we're going to talk about it in the next section, but the market's pricing these things in as a permanent staple forever,
yep.
Right? And a lot of clients I've been talking to is saying, time in the market's greater than timing in the market.
Right.
And I don't think you want to miss the day where Trump said, I know it's not April 1st anymore, it's April 2nd, but I was just kidding, right? And we're not doing anything. And everyone rejoices. And even some of the other countries like, oh, thank God. You know what? Thanks, Donald Trump. I'm going to lower our tariffs over here, too. I don't know.
Yep.
That's the rosy part, but everyone bakes in the worst case scenario.
Yep. So, yeah, I think we'll talk a little bit. We'll get into the nitty gritty of tariffs. And I think one of the major segments everyone's concerned about is car makers, the autos.
Yeah.
So we'll get into that. Kind of also interesting. Goldman reduced the GDP target for the year from 2% down to 1.5%.
Yeah.
And then also basically priced in 3 rate cuts, which I think would probably start to get some people excited, and would also, go into the quote unquote conspiracy that Trump's trying to lower rates so he can refinance at or Trump's trying to lower long-term rates so we can
the Treasury can refinance debt.
Exactly.
Right? Yeah.
So
well, and then the other thing that's coming up, and I'm not going to really hone in on this, but stagflation. I just keep on hearing about it, and what that really is muted GDP. And if we're going from 2 to 1, like Goldman says, that's muted, right? And then high unemployment. Well, we don't have high unemployment yet. I say yet, but you never know if they're going to cast all these tariffs and there's, you're shrinking margins. The first thing to go is normally, human capital.
Yep, for sure.
Like letting people go so that the margins can still stay where they need to be operational. Now we're also talking about inflation going from 2.5, 3 to up to they're recasting at 4. You tie all those 3 together, and there could be a stagflation. It could be a stagflation environment. It could be.
Yep.
But let's move on to the tariffs because I got an idea on that. So how is this gonna? I think the biggest thing that people see, because it's such a big ticket item, are cars, and people love their cars. But I believe we have the oldest, car. The average car on the street is like
definitely.
12 years old. That's crazy to me. It just doesn't look that way. But I don't know. I can't look at a car and just be like, oh wow, it's a 12-year-old car, isn't it? Like I just can't see that.
Yeah, I mean, I was in Orlando for during spring break, so lots of people there.
Yeah.
But the rental car that I got was the biggest piece of shit rental car I've ever had in my whole entire life. It was a Nissan, not a Nissan. It was the big Nissan. I want to say
The Armada?
Yes, the Armada.
Really?
Yeah.
Well, you didn't like that car, huh?
Which is a nice car, generally, but it had like almost 40,000 miles on it. Like pre-pandemic, you rented a car, it had like 500 miles on it usually. And they had all the bells and whistles. This had no bells and whistles.
And
I don't want to sound spoiled or anything like that, but it didn't even have automatic lights. So I drove in the morning a couple times and I didn't even have my lights on.
You getting flashed over there?
Yeah, I did. So the age of cars is definitely noticeable.
Yeah.
And I also got just from shopping around or whatever. There was several emails sent out by car manufacturers saying, which is today actually, Liberation Day, as Trump says, April 2nd. They sent out an email basically saying, hey, we don't know how this is going to impact things, but it probably will impact price. And you wonder when it comes down to it, right? And you're facing it. You wonder if it might actually work, right? Because if someone's buying a Mercedes, do they really care if they're paying $90,000 for it or $98,000?
So I can understand that argument. I think I saw something on watches on my Facebook or something like, hey, like there's gonna be a tariff on these watches, or like, hey, if you're buying that kind of watch, do you really care if it went up $2,000? I mean, seriously, But so here's the thing. So like, what did we have? Like Hyundai said they're gonna be building a plant here.
Yep.
I had this conversation with the client literally a day or two ago. They worked for Toyota, and when he retired, he bought their fleet of cars because they got cars really cheap, and then they bought them.
Right.
And they financed them, but their financing is anywhere between, it's on average is 6.5%. Some are 5% and one's 8%. And they're like, Tony, should we pay it off? And I'm like, oh man, that is a high interest rate. But I'm like, why don't you let's pay off the ones that weren't built in the United States, because President Trump said, hey, if you buy an American car that was built in America, your interest could be deductible.
Right.
And I'm like, well, if we're going to do this, let's pay off the car that's not built here because you're not going to be able to and paying 8%. I'm like, let's attack the 8%. That's the one that's built. Now, like that was an obvious. So like, let's focus on that one. But I'm like, let's just let a couple things shake out, but let's see how after April 2nd. But that was a thought like, hey, do I keep this car even though I'm paying 6% because the interest is deductible?
Yep.
It's something you have to dig a little bit deeper. Does that really going to make a difference? The standard deduction so high, right? Can I dig out of that hole, right? And it's not a hole; it's like actually a really nice, standard deduction. But the one thing is that 6 of the top 8 sales of cars in the United States are they're imported, right? Yep. And we're talking Toyota, Hyundai, or Honda, Nissan, Subaru, Hyundai, and Kia. And Subaru, 73% of their sales are from American buyers. Right. Like, holy cow, you might go out of business. But Toyota has the most volume by far. Right. They're like over 2 million. The other 5 companies I mentioned, it might be just around 2 million combined.
Yep.
Right. So Toyota's like, I think it was like 25 or 30% of their sales are based on United States sales, but it's a popular car around the world.
For sure.
A Toyota, Honda's makes great cars, but 60% of their sales are reliant on the United States buying them. So they have problems, right? And the one thing that you can notice this year is the company, some of the stocks that are doing very well are the used car parts stores, AutoZone, O'Reilly's. I know one of the companies that we recently bought was Genuine Parts. Kind of under the radar, but they pay a dividend of like 3.5%, and they do the same thing as AutoZone and O'Reilly. My investment team kind of thinks that that's of value because they're only up 1.5%.
Yep.
When these other two are up 20. So I think it's more name recognition. But when you start diving into like the fundamentals, it could be a good value for like a stock that we recently bought in our stock portfolio. But let me finish on this, and you can jump in, Derek. But what if we win the tariff war, right? So what would happen? And when I say win, it's like Donald's like, hey, I was just kidding, right? Like I got what I wanted from all these other companies. I throw out my hands and and now we don't have all this stuff. I'd imagine the market's going to rally like the Dickens.
Real hard, yeah.
But we're talking, we're going to have normalized prices that we were used to. And maybe even lower prices on imports. Maybe they, maybe we just have lower prices because now we're lowering our tariffs. And again, it's about margins. But there could actually be more volume on our exports, and that means more jobs. If there can be a deal struck where it's like, hey guys, stop taking advantage of us, make our stuff cheaper to buy in your countries, and we'll remove what we just did.
Yep.
That's the premise behind it. It's not to make money.
Yep, and that's what just happened with Israel, I believe. They basically just can't. That's what Trump wants to happen. That Israel canceled all the tariffs on U.S. imports. So there's no tariffs between those two countries now.
Okay.
So yeah, and onshoring jobs again. We've talked about this many times. You can't have a robust economy and have and not produce anything domestically, right? So and that's one of the major beefs with Canada right now is they're refusing to adjust their tariff situation on us. And it seems to go back and forth depending on what news station that you're listening to. But especially the agricultural products, and maybe we can close the topic on this. Rolls. I'm not buying a Rolls Royce, but Rolls Royce moved manufacturing back to the U.S. I know some of those other car manufacturers are starting to do that. That is the point of these tariffs.
Bringing jobs.
Yeah,
here.
bringing these jobs back.
More car plants. That means more steel. More things that we can use United States steel again.
Yep.
Right, because we don't want to pay a tariff on the steel that's going to be, imported.
Yep.
Right. Let's build it here and use it here, and it sounded like President Trump is willing to give tax breaks for using,
exactly right.
Buying American. So we'll see how that plays out.
Mark Tepper here from SWP Investment Management. It's time to elevate your portfolio with the SWP Growth and Income ETF. A diversified basket of high-quality growth companies that pay dividends, SWP stands out from the pack because total returns matter. Don't just invest, thrive with SWP. Visit investswp.com for more information. Disclosures apply.
Yep.
All right. What's new in the Doge?
Yep, in the Doge world.
The Doge cage.
So there's this website, I guess, is called Trueflation. That kind of tracks real inflation. I've only noticed it recently because I've seen some stuff on Twitter, X or whatever. But that number is down to 1.8%. And you can pick your topic with Doge. There's so much that they're looking into, but just I think we've been pretty consistent over the last couple of years talking about the problem with inflation on energy too specifically. That is in its truest form is just caused by too much money chasing too few goods. So, it was kind of brought up this week on one of the talk shows because Elon mentioned it a little bit. But reducing the government spending and the government waste and pulling money out of the money supply should definitely have a positive long-term impact on inflation.
Yep. Will it curb inflation? In the short term, no. Mm-hmm. It won't. It's not. It's actually going to hurt it.
Yeah,
in my opinion, because if I make X today and now I got to go buy a car that's 1.25x,
right?
What it used to be, there's inflation there, right? But again, we just talked about it. Build American, buy American. What does that mean? Jobs. If we have jobs, we can buy stuff, and that's what our country is built on: consumption. Right. But that will. I know we have higher wages, but that's going to create the ability for us to pay the higher cost. I mean, everything is going to be inflated to adjust for what we feel is a 25% increase on everything. But you look at some of these other tariffs that people have strapped on us, and it's 25 is a low number.
Exactly.
Right? But this could cause people to just stop buying. And will that comes, the recession fears. That's why, right? If we just pause on buying anything, waiting for stuff to play out, I might not buy a car for 3 months. Mm-hmm. Yeah, that's going to have a negative GDP impact, right? And that might take a quarter or two to cycle through, actually. But it could also cause prices to come down so that they're more competitive, right? They squeeze the margin, lower the price. And that's not good for anybody because now you're when you're squeezing margins for a corporation, they got to make cuts somewhere. Yep. And then, you don't want to talk about it, but it's probably jobs. But down the pike, I feel that the result of all of this is from just printing money. Mm-hmm. Printing money out of thin air, this helicopter money we got during COVID, is $4 trillion, man. And it's probably more than that.
Yep.
Right? But here's one thought, and I got a conspiracy theory for you, like after this, but hang on. Finding more government waste and cutting it out, I feel that could actually justify lowering taxes from even this point going forward. Our taxes are historically low right now, and we're running a deficit because we don't know where the money's going. Right. We can't identify where it is, and that's where my conspiracy theory question is going to come up. But if there's more money, if we can lower taxes even further, that puts more money at the bottom of my checking account. And if I have more money in my checking account, I can pay for the things that are higher because I am supporting America and American growth. So it's not just, hey, like everything's more expensive and I'm stuck. Mm-hmm. There is trickle down effects in other places that are being tried to be done in simultaneous areas.
Yep. I mean, make no mistake about it, and we've talked about this quite a bit too. You know, some of the pain we're going through now has been caused by, you know, the government essentially propping up the economy for the entire, you know, second half of last year. You know?
Yeah.
And we were talking about it in real time too, when, you know, 90% of the new jobs added were government jobs. You know, just running giant deficits and then giving people fake jobs is not a recipe for long-term success.
Sending fake people real money.
Yep.
Where's that money going, right? So, all right, just really quick, we'll wrap up the show, but the conspiracy theory. Here's what I got for you.
All right.
You know, I like to read some of the things that the left is saying to help weed out what the right is saying, like to see, like, okay, these are what both places are saying, right? The one comment that I saw is they're like, okay, Doge, you're doing such a good job and you're identifying all of this corruption. Where are the arrests? And I'm like, valid question, right? So I gave it a little bit of thought, and I'm like, okay, first and foremost, like they're honing in on these NGOs, these non-government organizations, because that's where the money goes. And then you start listening to what Elon said. He goes, then it's spider webs.
Right.
It's this huge spider web, and it's like tracking the money, right? Like, hey, I paid this organization, but that organization now paid 15 other organizations to do X, Y, Z. Right. And then there's, you know, Elon saying, well, that's actually then sent across seas and then sent back here in a briefcase.
Yep.
Right. But first of all, like my battle on that is, first, it's a spider web. Like, they're not stupid. Like, hey, just dumped in this. It's going to be very hard to find the money and where it actually goes. If they've made up fake, if they're paying people that are 150 years old in Social Security, you don't think they made up a shell company to dump into, and and then it goes bankrupt and you can't find anything, right? But also, don't you think it takes time to build a case? I mean, you can't just be like, oh man, you're arrested. Like, we found, you know, there's no red hand, because they knew it was coming. You don't think they've been covering their tracks for the last 2 months, the 60 days, 70 days Donald Trump's been in office, and he brought out, you don't think these dudes are, you know, torching papers and severing bank accounts? Like, come on.
That's definitely happening.
Yeah. So I wouldn't be surprised a lot of it just ends up in a dead end, you know, in a vacant office somewhere.
Yep.
So,
you know, honestly, arrests are a bit much to hope for at this point. Just stopping the waste is a pretty good consolation. So, you know, we've been talking our whole careers about how Social Security is, you know, going to run out of money. That date just keeps getting closer and closer, and, you know, seems a third of the country doesn't want Elon to, you know, find the corruption in the Social Security system. It's really a pretty wild take, but it's something that I've been, you know, hoping for my whole life in government. Is, you know, that's really my core belief. I want the smallest government possible. Yeah,
I like that view. It's like maybe we should just be thankful. Like, finding a somebody getting fired or somebody getting arrested is probably the most unlikely. But how about just the wasteful spending stopping?
Yep.
Like, that's actually the goal.
Right.
Someone goes to jail, like, I guess that's icing on the cake if they were being bad, but good luck finding that person.
Yeah, for sure.
So good. I like that take. I like that. Good view. All right, man.
Oh yeah.
Well, the mugs.
Yep.
So we had two good submissions. We got to work through them a little bit. One's more on a retirement planning angle, and I have a really good idea and case example that I did with a client on pensions and you know, lump sums versus pensions. And then you know, the other one was like we're going to have to do some investigating for getting you know, maybe a subject matter expert in here to talk about something, right? Whether it's taxes or planning or hedge. You know, I was thinking maybe even get one of, like, you know, we sometimes use private equity for some clients, and maybe get one of the, you know, one of their reps in here to
Yep.
talk about the pros and the cons, because
Yep,
there
for
is
sure.
pros and cons when you start working with alternatives. So those are some of my ideas, but if you have any ideas, submit them to us, right?
Yep.
info@swpconnect.com is going to help us figure out, what's some stuff that we can bring to the show that's a little bit different than, the headline news sometimes.
Yep, for sure.
So, all right, D, take us home.
All right. Well, thanks for listening. Like Tony just said, hit us up with those show ideas or questions, comments at info@swpconnect.com, and we'll talk to you next week.
The opinions expressed in this podcast are for general information purposes only and are not intended to provide specific advice or recommendations for any investments, legal, financial, or even tax strategies. It is only intended to provide education about the financial industry, so please consult a qualified professional about your individual needs.